Good morning, team. It's Friday morning, 8 a.m. I wanted to make a quick video before the market started today, just kind of like touch base on different things that I'm seeing here. This is the Nasdaq Composite, the daily. We were up nicely yesterday, um, but guys, again, I just want to reiterate, we're coming up to the 21. Okay, so uh, when we did it last time here, we kind of hung around for a little bit, and then we fell apart. So this is gonna provide major resistance. All these guys right here, all this volume that occurred in here, if you notice here, we're going up on volume as this was happening, and then as we're going down, big volume bars were on down days. So all this right here will be major resistance, and then you have these guys over here. That's gonna supply resistance. The 50 is coming into play right now as well. If you go even a lot higher, so what I'm trying to say is, I'm just reiterating the same thing because this is just the way the market is. Don't step into this. Don't step into this because we're not going to have a sustained uptrend where you could have, 7, 8, 9, 10, 12, weeks, a couple months of like, this. Okay? We're not going to have this. We're gonna be just chopping around, going lower. If you notice, let me go to the QQQs. If you notice, this 285 level just kind of been, hitting our head against it every time we kind of go into it. We find it fall down. Yesterday we went up a little bit up above it, and we still closed out lower. Now, so where we at? This morning, I think we're up a little bit. There you go. We're up at 287. So 287 will be like, let's say somewhere around here. Okay. What does this do? This is what it does. Today we're gonna probably fill this gap. Let me clean this up. See this gap right here? This kind of try to fill it in here, but we kind of, this is close enough, guys. This is this little bit right here. We're probably going to be the 288, 289 level. We might get a nice little rally into this, maybe even hit 290. And I'm thinking we're just gonna fall from here because again, this is nice little uptrend, but it's not, it's not this, it's not this, it's just it's this where like you're in a 3 to 5 point range for weeks. I mean, back from June 10th, from June 10th on, we've been from 270 to 290, 20 point range, but 20 point range on the low side, not 20 point range where we started here and now we're here, and this is a 20 point range increase. It's a 20 point range of, and then I'm thinking here, and then we come back down again, or we might keep going up, and then we still have this gap at 295, and like 299, almost 300 to get filled. So just don't get overly excited about, the pre-market was up a couple, almost 130 points, but now we're only up by 90. It's just choppy. It's we're gonna continue to be chopping around. Don't get too excited about one day moves. The stocks that I've been mentioning, the last two that I kind of had, Go and Vivo. I kind of gave you guys those a couple days ago. Holding the 21 real nicely. It was up, almost 4% yesterday. So this is working. It's definitely to extend it from the 21. And also another thing I want to mention. I took away the 9 EMA. I just had the 200. This is the 200. This is the 50. This is the 21. This is the 200 simple, the 50 simple, which is like just industry standard, and then I have again industry standard, the 21 exponential moving average. This is the 21 EMA exponential. This is simple. This is simple. I took away the 9 EMA because again I'm trying to kind of hold things a little bit longer to get this more sustained trends, and we're not getting them now. But I want to adjust. I want to kind of condition myself to look for a little bit longer trends. Like for example, if I would have taken this breakout right here, this breakout right here, I would have taken it here. 21 would have been my line of sand. It never really violated. So let's say I would have taken it at 36.58 to 42. That still would have been a nice move. Even a lower cheat entry right here, this gap up right here, you take it here, it never violated. Or even if you take a pullback to the 21, and then you wait for confirmation and you take it here, it's still at 36. So what I'm trying to say is I'm trying to use a 21 a little bit more than the 90 EMA. The 90 EMA might be a little bit too fast, and I don't want to get into like a day trading or a 2 day hold kind of thing, which this market is, it's just the way it is. So like that's why I'm kind of stepping away. I literally have like only 2 positions. I have Vivo and Go. That's it. Vivo and Go. Uh, Go. I'm stopping out probably somewhere in, I'm half in this little range here, and then below 40, I'm stopping at 100% of my position. So it's working right now. But again, just far and few in between stocks that are doing anything. But again, this is what I want to mention. I took the 90 EMA out of my equation. I'm not even looking at it anymore. I want to look at the 21 as my kind of like go to see whether if it's too extended from a 21, I'm not adding. If it's a pullback to a 21, I'm looking at a little prior base. Let's say, perfect example. Let's say over here. Okay, it came back, it pulled back to it, it hit it. Okay, so what I'm saying, I saw this little base kind of built up here. I might draw a little trend line here. I might get in right here, and then have the 21 be my line in the sand to get out. So if you use a 21 as your entry, what I'm doing is I'm not buying it once it hits it. I'm buying it once it pulls away from it. So let's say it hits it right here. I'm looking at these 2 prior days here as resistance, and then even the next day it came out to the same spot right here. So what's my entry? That's my pivot right there. When it gets above this little tiny little shelf off the 21, when it's pulling away from it. I want to buy stocks that are going up. I don't want stocks that are going down, anticipating this is the low, and now I'm going to get in at the absolute low to get this massive move. I have no idea what the low is, okay? So I'm going to let it go down to a key moving average. In my case right now, I'm keying in the 21. It could be the 50, but I'm keying in the 21 EMA. And then once it comes near it, and then it starts pulling away from it, I'm looking for prior resistance, prior bases that need to be cleared in order for me to have a nice little clear move further up. So again, these are all below. So let me show you an example of the other one. The other one that I have is Vivo. This is working. Again, not doing anything crazy, but it's still trending higher. Again, it's higher than the 21. Really extended here. I wouldn't get into it here. This kind of 29 area would have been an entry. But what I'm saying is, for example, you're looking at it here. You're looking at it here. Okay, it came back to the 21. Perfect. I'm gonna get in now because it's pulling up from the 21. Well, I'm getting in once it clears this space here. What did it do? It kept on going lower. So I'm not trying to time the bottom of the 21 because look how much further it went down. The same thing here. Now it's above the 21. Great. This is still my line. This is still my line right here. So you notice it came right to it, and it lost it again. Okay, I'm above the 21. If I continue to draw the trend line, this is my entry right here. Okay, so that's my entry right there. Now where's my exit? At 21. This didn't work. But what I'm trying to say is, you might have gotten this little move here and maybe sold some into strength. When it got above the 21 again, this is the 28.72. This is your entry. So again, look how it kind of held it in all these levels here. So let's say this would have been a great base entry, right? Obviously, you can see this little base here. You bought it right there, and obviously you had 3 days here into strength. I would have sold some strength here. You wait for the pullback, hit the 21. What am I doing? I'm either going to do this and wait for this entry, or I'm going to look at this little base here and look for this entry. Same entry, right? And then the 21 is going to guide me all the way up. So let's say I would have bought it somewhere right here at 26. I might be selling somewhere here at 28. So just kind of a little guidance of like how to use this moving averages to kind of get the emotion out of trading and get more into a systematic approach where you look at things from a robotic systematic approach where like if this then that. Above 21, if this is good. Below 21, if that's not good. Above the line is good, below the line is bad. Just that simple, guys. Okay, just wanted to kind of give you a little heads up on that. A couple little stocks that I'm kind of looking at. That, that again, I'm not taking any major action on, but just something that is working. I'm kind of noticing biotech. It's kind of doing a little thing. Up, 3.5% yesterday. Pre-market up a little bit. This 236 was kind of, would have been the buy point. This little base here. And again, if you go back to the 21, here it is, guys. Here it is. But what would you do here, right? You have this massive, massive, this 195 little base here. If you boom, 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 this would have been your entry at 195. You're at 240. That's a 45, 50 point move. Okay, from when? When did this happen? This happened in May 20th. So you would have held this. That's why I'm not really keen in 90 MA anymore. I'm kind of looking at the 21 because once I take this pivot here, I probably would have sold some into strength in the 220 range, but I would have probably kept some a little bit and then let the 21 be my, because if you notice, it never really closed below the 21. It went through it during the day, but then it closed above it. And stuff. If you notice, closed above it, closed above it, closed above it, closed above it, closed above it. This is your base. Another re-entry right here at 221, 222, and you're at 240. So this is what I'm trying. What I was saying before. You got to pull back to a 21. I wouldn't buy here, and I would not buy here, and I would not buy here. I will buy it when it clears. Probably this little entry right here. So I might have gotten in right there on this little peak above it, but then I would okay, I'm buying it there. I'm letting the 21 be my stop out, and like I mentioned earlier, it did not violate it, as a close. So I would have probably kept it still, or this will be a second entry above this little base right here. You take it right here, and the stock has worked the last 3 days beautifully. So this is something where like you could be looking at, where you could use the 21 as again when it's too extended. If you notice here, when you see too much white, too much whatever your color your background is, when you see too much air between the price action, the bars, and the 21, that's not a time to be getting in, because when you have a lot of if you have a lot of space here, it tends to come back into it. A little bit of space, come back into it. A little bit of space comes back into it. A little bit of space here comes back into it. A lot of space here comes back into it. There's going to be a lot of space here. This is eventually going to come back into. Now, you can come back into it by price falling or just by price kind of like tightening up here, not really doing much. And the 21 just with time catching up to the price. And then you have another entry, another little base build up for it to take off. Okay? So I hope that kind of gives you a little bit of an insight of what things that I'm looking at. Besides, you got a base breakout, I'm taking it. This never really, basically gave us an entry. Now this could be like a double bottom here. You got this low and this low is lower. This will be your pivot. So let's say this would have been your entry at 208. Let's say it's a nice little 10-point move. Once you see this bar here would have gotten you out. Definitely a close below a 21 would have gotten you out. So again, there's different entry points, different pivots, and different setups, but all within uptrending stocks. Make sure the market's behind you, and make sure things are working your way in here, and you don't buy extended. Like you don't want to buy this big gap up here, right here. You don't want to buy it there. You want to buy it when it settles a little bit, pulls back to a key moving average. Then you draw your trend line on a little base buildup, and then boom, that's your entry. Okay, that's your entry. This is not your entry. Pull back to a 21. Oh, it hit it. Let me get in. This is the low. You have no idea, guys. Okay, you have no idea because this could have gone even lower. This could have gone even lower. You have no idea. You let it prove itself. You get confirmation. Get confirmation before you get in. Okay. Have a great trading day, and I'll do I'll run some scans over the weekend and send you guys the list for next week. All right. Any questions? Please don't hesitate.